Checking vocals. 1, 2, 3. 1, 2, 3. All right, vocals look good. Looks like the charts are loading. All right, we are good to go. Okay, so good morning, afternoon, evening, whenever you're watching this. Hope everyone's had a fantastic Friday and weekend. There's been some wild, absolutely wild moves in this previous week, and tons of volatility. So lots of good stuff coming up soon. We can start to see markets being, we can start to see some really, really wild, big range moves, and not quite to the point where I'm bearish yet, but the size of sell-offs is increasing. So I'm watching that really closely this week, and I am also going to be watching quite closely how our commercials are also performing as well. I want to make sure that I'm in line with what commercials are doing, and I want to make sure that whatever they're doing, I'm also moving in the same direction as them. So yeah, I think it was really, there's been some really interesting moves of late. Let me see if I can take a look at the charts here, and we'll take a look at that today. Okay, so let me see what's going on here. Hopefully I didn't disconnect there. Okay, great. So I want to see year here, year here, and I want to also see the Dow here too. So about a year. Great. Okay, so right now the markets aren't really in that big of a they're not really in that good of cahoots right now. So it's making it really difficult to determine what's about to happen. We are and have been in quite a bit of consolidation for quite some time. We see that there has not been a significant move from commercials going net short versus net long across all three indices. They are all equally different. They've changed quite a bit, and I think that this makes it really difficult to determine which direction the commercials want to move. When that happens, that's why I've been mentioning for the past week, scalping conditions are in order, because we don't have that much to go off of right now in terms of what direction is going to be in play. So, like I mentioned before, I think it was, it was maybe Thursday. Very difficult to tell what direction we are going because we're in the middle of a range. And so remember, Thursday we had a vicious drop, pretty much made up like more than half of that drop. So we're still in the middle of the range, and that's where I am still going to be assuming we'll stay for quite some time. Uh-oh, am I disconnected here? I need to see if I'm still streaming. Okay, still live. Good. Hopefully I am still live here for those that are still watching. And if not, well, there's not much I can do about that, unfortunately. So anyways, so what we're going to do, we're going to take a look at the economic calendar here, and we're going to take a look and see what we've got. So key things this week. Monday, we've got the Chicago Fed president talking at 1 p.m. So afternoon session might run a little bit better. Tuesday, there's not really anything. 6 a.m. there's NFIB optimism index, but it's not something that greatly impacts what is going on with this right now. Okay, still connected here. Sorry about that. This internet's garbage. I really don't like this internet. All right, so anyways, still disconnecting here, so let's try and find the market again. Okay, so still reconnected again. So, key things to watch out for are CPI on Wednesday and PPI on Thursday, as well as unemployment claims combined. Those are going to be some of the biggest ones. And then, of course, in the afternoon, you've all seen what happens during a 30-year mortgage auction, 30-year bond auction. Sorry, not mortgage. So Thursday is going to be a really nice day to trade. Wednesday is going to be a really nice day to trade. Be careful because you can see big reversals. So let's take a look at the charts and look really quickly what we're going to be aiming for. Okay, let's bring a larger chart over here. And we're going to start on the weekly chart as we oftentimes do. So this is the latest weekly chart here, right? So you can kind of see nothing but we've been nothing but consolidate here as we have been doing for the past few times, right? Few weeks on end. And we know that this can happen. We know that this can happen frequently, right? This can continue over the course of the next few days, weeks, months, potentially. So you can kind of see how at the end of the week we ended and we went all the way down, took out this area of liquidity during the past week, and then we barely peeped below there and we headed higher. So we knew that there's going to be some pretty big ranges because we had that nice inside bar here. So we didn't take the high of this previous 2 weeks ago, right? So right now, what I'm looking at is what's the next level of liquidity which we could take? Well, things I'm watching out for is whether or not this week continues higher and creates an even higher short-term low, or if it continues to head lower and creates a, maybe it creates a little high here and takes out this week and then just stops there and then heads lower. That would allow me to then create potentially a short-term low, a short-term high up here that's lower than this short-term high. You could see a plausible movement towards expansion lower from a weekly perspective. Again, we're right smack dab in the middle. So do I think that it's likely that we head to the midpoint of this wick? Yes, I do. Do I think it's likely that it will head all the way down lower here and take this out this week? Possibly. It depends on the data, but you want to keep this in mind. There's a very good chance that during an election year, they're going to try to prop the stock market up. So even though everything seems to be screaming shorts or waiting for shorts, I would not do that until I see a firm candle close below a short-term low. So that is what I'm going to continue to look for this week. Again, it is very difficult. We're right in the middle of a range here, and you don't want to be going for major trending moves. We're not in a trending environment, right? So we want to stick to our consolidation rules. We want to look for turtle soups, expect that key intermediate term highs and lows will be taken out, and we'll take a look at the daily in order to emphasize this. So here. So on the daily chart, this is the same range there, just on a daily chart here. I'm blowing this up so you can see a little bit more. So you can kind of see how we stair-stepped down some weeks, eventually rushing down to take out this area of liquidity, coming back up inside day, coming up here, taking out a key area of liquidity here, and then coming up to a new week opening gap, and then completely being destroyed on that Wednesday, that Thursday, and then of course reaching another old new week opening gap, and then bouncing back up from there on Friday. So what we've been doing is we've seen these imbalances be closed pretty quickly, and what we haven't seen is we haven't seen a drop below that 20-day IPTA low. So for the time being, I'm going to assume the markets will remain trending and or continue slightly higher as we've seen here, until we see otherwise, until we see a big displacement candle close down below. What does that look like? Well, when we shifted trends back in July, we saw that there was a failure swing here, and then we saw a displacement below a key intermediate term low. Once I see that, that's what I'll be looking for on the daily as well over here. So we see it has to be a candle close too, right? So this is an intermediate term low here with a higher low to its left, higher low to its right. If we can take this out and close beneath that, then I will shift my narrative to be more bearish, right? Hopefully that makes sense for those who are watching here, right? So that's what I'll be looking for this week. I'll be seeing if we continue to, if we've taken this out, created a relative equal low, and then if we continue lower to take that out later on this week, or to protect these lows to continue stair-stepping higher and to continue this consolidation this week. I have no doubt that we could had a lot of liquidity waiting up here that's been engineered, and it's just waiting for an event to blow through all that. So I'm particularly watching this week. I'm watching this IPTA day high. I want to make sure that if it breaks above 18708.5, and of course I'm disconnected again. Great. This is fantastic. And I think I'm probably officially disconnected here. Let's see. Okay. I hope it's not. I hope it's back. But long story short, I would like for it to see this come down to the weekly chart, midpoint of that consequent encroachment or midpoint of this wick. I'd like to see it track to that and then bounce back upwards this week. But we'll see how it plays out. 4-hour chart. This is the last time frame I'm going to go through today because it's late and we need to get you to sleep. So hold on, let me. I think I've actually been disconnected now. Maybe not. Sorry, guys. My internet keeps on disconnecting here. It's not terribly fun. Okay, so 4-hour chart, you see a lot of the same. You see we've consolidated here. We've long thinking this is it. We've shorted the crap out of them, thinking, you know, gotten them out of all their positions. But we've protected this low. This was a turtle soup low here, and we protected that low. So my guess is that this week we will do something similar where we head lower first, pick up some of these fair value gaps, buy side imbalances, and continue to head higher to aim for some of these relative equal highs. That's what I'm hoping. That's what I'm mapping out this week. Jacques Van Munya, internet in the USA. Yes, internet in the USA. They are not equal. There's bad internet in various parts of town, various parts of the United States. So, yeah, it does disconnect me, unfortunately. So, okay, so on the 4-hour chart, you want to and need to be referring to your weekly and daily bias first and foremost, and then that can help you consider what might happen. Now, I do see these as relative equal lows here, and we see this is an important low. So if I see the price head lower below this, I will be looking for evidence of turtle soup buys when it hits this level here. Can it go lower? Yes, but I will look to see if it heads lower, it's going to head over to this buy side imbalance here, which then we'll be able to maybe bolster this over this week as well. So here's a really nice 4-hour buy side imbalance that would take out all of this here, and we would need to see if we wick down and immediately come back up, then I'm going to be aiming for what? The remainder of this buy side liquidity next. I would like to see that first. I'd like to see us come down, take out this or this buy side imbalance, and then head higher to target this high, this bearish order block. Maybe this mitigation block first, and then this bearish order block, And then, of course, if it can break above this new week, the new week opening gap, there's a lot of new week opening gaps around this area, so I expect it to react at those levels. It's not going to be easy trading this week, but yeah, that's what I'm looking for. Europe is better and cheaper, Jacques Van Munya says. Yeah, maybe so. Yeah. I'm looking for fiber to be installed. I'm hoping they install fiber around me sometime. Okay, so it doesn't really help us to try to anticipate where the 4 hour is going to go right now. There is a little bit of sell side imbalance remaining here, as well as this turns now into a old new week opening gap. So what I'm going to do here is I'm going to create a duplication of this. I'm going to go put it in the new week opening gap here. Roughly. New week opening gap there. I can change these into old new week opening gaps. So I can still refer to them, but I do not want to have them as the sole on my charts. So you can kind of see how each of these horizontal gray lines, these are old new week opening gaps, and you can kind of see how we bounced exactly off of this one. And then we came down and bounced exactly off of this one. And now we're back here. Now, you're going to see price move between these two new week opening gaps a lot. It is not going to be a fun... Okay, I apologize for this disconnecting multiple times. This is very unprofessional from BreezeLine. Never get BreezeLine internet. I've said that multiple times, and I will be calling them quite angrily after this call. So I'll go ahead and I'll have to close up here, but yeah, let's look at gold. Jacques, are you trading? Oh, am I still disconnected? God, I hate this internet. Fuck this internet. All right, sorry about that language. But I really, really hate BreezeLine. Do not, if you're ever in the States, never get BreezeLine internet. Do not do them. They are horrible. So, hey, Dipchibao, good to see you, man. I was just closing up today because my... disconnected again. What the frick is going on? All right, I don't know what's going on, but my internet is freaking out. So sorry about that. So let's take a look at oil. It's fine. I can hear you. Okay, good. Jacques wanted to take a look at oil. I don't know anything about gold. I don't trade it, but I do trade oil. So oil has been in a really interesting tightening range here. We've had 4 weeks, essentially 3 weeks of up movement here on the monthly, or sorry, 3 months, 4 months almost. And we're starting April higher as well. So if we take a look at the monthly, we can see we're constricting here. So it's not easy to tell which direction it's going to go. Is it going to fail here and then head lower? It's already come up above this 1 month discount. And it looks like this even moved a little bit. So I think the contract probably changed. So I have to remove all my drawings here. So essentially, you can kind of see how we're aiming for this area here. So that would be my next buy side liquidity. I would like it reaching up to this level of 89.21. I think there's room for 4 points higher. And then I think we'll see a turtle soup sell here. If we don't see that, then we'll see it rise up to take out this level to aim for 105 over the coming months. So I like that level on a monthly. I think it'll hit that. I don't think that we didn't close below the midpoint of this here, and we created a higher low. So I would like to see us close above this, maybe head higher, close above this, and then come back, treat this as a mitigation block, and head higher. Okay? Okay, so let's see. Dollar. Let's take a look at dollar because it was very interesting last week. And I'm disconnecting again. This is so annoying. Okay. Okay. I am back. I really hope I'm still here. Okay, still back. This is very annoying. Sorry about that. Need cheap oil for the economy. This is macro. Cool. Yeah. But we're not going to get cheap oil anytime soon. It's going to they can keep on going higher as they want, as high as they want. Okay, so dollar. This is kind of key here on the monthly level. Remember, we dropped down into this buy-side imbalance, headed upwards, came back down, and are now in the midst of a battle within this range. We ended up taking out this previous month's high, and we've dropped. So the thing is, if this inversion fair value gap serves as I think it will, then it will work out similar to this being a displacement lower than this short-term low. This will work out as a return back to a sell side imbalance here, and it will also work out as a inverted fair value gap here, this buy side imbalance. This will treat it as a inverted fair value gap, which will allow it to sell off from here and target this short-term low here. So that's what I'm thinking on the monthly level, and a lower dollar should mean higher equities. Let's take a look at the weekly chart though. So remember, we recently took out a short-term high on the weekly chart right here. And we've got that immediate sell-off from there, but not to say that we didn't finish off of this inversion fair value gap, but we did have a bearish order block on the weekly to help us say, hey, you took this buy side liquidity, you reached a bearish order block as well, you're above the 50% mark of this inversion fair value gap, and we inverted and closed below that inversion fair value gap. So dollar, I believe, is likely to head south to this buy side imbalance, and then we can see if it will want to breach below this relative equal low as well. So all of that would point to us heading higher in price, but again, we're in the middle of a consolidation, so I'm not expecting a huge trend there, and we don't see the markets are correlated right now, so I don't know. We'll see. Trading for science. If you vote for Trump, oil will drop. Drill, baby, drill. Yeah, maybe. They're finding oil in a lot of different spots in the United States, so that's good, and there's new technology. I don't know how efficient fracking has become. Back when I was going through my undergrad in chemical engineering, there was not a high efficiency of oil fracking. So I'm hoping they found a better way to clean that up for anyone who is in the oil industry might know. So, so yeah, I think that dollar is going to head lower, at least to this buy side imbalance that you see here. So if you see this low here, to this low here. I've drawn this one out over time, but I do think we're going to return back to this low here. And what does that mean? That means we're going to head lower down to 103.90, 930-ish, 103.99, and that would allow us for equities room to move back up. We'll see what happens there, but that's what I'm looking at. That's what I'm seeing on a weekly chart. And on the daily chart, you can kind of see we had a turtle soup sell-off there. We came back up to this sell side imbalance, rebalanced this, and immediately headed lower. So, so I think that we are on our way back downwards. So I'm looking for a price to head at least down to this sell side liquidity, which would be coupled with this bullish order block as well. Do we head all the way down here? That would be tougher, but not impossible, but I think it'll be tougher. Yeah. Will Peace, thanks for this insight. Yep, I'm gonna close up now as well. I need to get some sleep, and yeah, so I hope that this what I've highlighted today in dollar and in NASDAQ. I hope that this is insightful. That's what I'm looking for. Do not let me influence think. Make sure you write down, hey, this is what I think. This is what Johnny thinks, sure. But write down, hey, this is what I think, and here's why. And then you can kind of see if your rules match mine, or if you want to contradict what I think and say, no, it's going to short like hell. And this is the reason why. Make sure you write that down, because if you write that down and you're right, then you start to get a sense of like, hey, I can trust my gut, right? So yeah, I mean, you definitely, I'm looking for prices to, continue to consolidate here. There's these relative equal highs I think will be ripped through during CPI or PPI. So I'm watching a movement higher. I'm looking for evidence for us to head higher from where we are right now, because keep in mind, on the daily chart, even on a weekly chart, but on a daily chart, you can see that we're still within this daily range here, and we've just about reached the 50% point of that. So we're now heading into a premium. Now, if we're looking at this short-term low, we're already in a premium, right? So, but we want to take the latest swing, and this is our main dealing range. As we get further higher up, you want to look for that 18,451 level, that 18,450 level rather, which is the consequent encroachment of this daily candle's wick. And then if it reaches that, you want to also take a look at the 18,511 and 18,560, roughly increments of like 50 at a time. I'm not showing my screen, are I? Sorry about that. So you can kind of see this on the daily chart, where this high to this low, that's our dealing range. And technically, you could even take this high to this low, and that would be our dealing range. But I like the overall intermediate term high instead. So from this range to this range, I would look at 18,450, 18,500, 18,550. Those are all really key ones. And then, of course, above that, all of these. I think that's going to get taken during CPI. Good statement. Think independent way. See you next time live, bro. Thanks, Step Chiba. Time to be goodbye. It's breaking as breaking as well. Yep. Make sure you get a break. All right, everybody. Well, thank you very much for tuning in. Let's see how Monday plays out, and then we'll create a better, more high probability game plan once Monday plays out a little bit. So get some rest, make sure you hydrate, and I will catch up with you on Wednesday and Friday. So I will be here this week, and I will be streaming in the morning, and I'll leave this on throughout the day, but I have to, do my job, so can't trade all day. But I will leave this on, and yeah, I think that's it. Have a good night. We'll talk soon. Trade safe. See ya.